this is where you could look, see how nice and large this candle is. This is where you could use your TGIF range. So on a weekly candle that's actually expanding and not expected to reverse, take your TGIF range, drop down to the daily or the hourly. Lines up exactly with session liquidity pools within this range, 20 to 30% of the weekly candle. So favor us running lower. Yeah, if we continue all the way up, maybe even a bit here, we could get the same kind of price action we got on, I think it was Friday. So if you want to look at this as original consolidation into a market maker sell model, you have low risk buy, first stage, second stage, smart money reversal up here somewhere, then we have to drop all the way back down. CISD would be down here. So if you want to find your breaker, high, low, higher, high, held that premium imbalance quite well. And here's your news. Looking good. Broken market structure shift. So short-term discount there. You'd like to see a retracement, preferably back up into this range. So touched it there into premium. AM session low would make sense for first target. And then Asian session low. And London is my drawn price right now. So now we formed that as a swing high, right? So I would trust that this up here is now an intermediate term high. We could actually come up and take this high one last time. I'm fine with the stop sweep on this here. Obviously, if it doesn't show any sign of that, then you could see something like this where it trades lower into this gap. Stop sweep there, and then it comes back down. But now you can rely on time to hopefully create a new low between here and here. We have most things on our favor, right? Market maker sell model starting to form with the buy side of the curve on this side, reversal happening prior to the 10 a.m. news, and sell side of the curve over here. And now we have time where we're looking for, we've already framed a short setup using ATM, using a bunch of different stuff. Now we can trust that this low will be taken between this range, preferably, and then anything past that is extra. By the way, inversion gap over here. So we can wilt through it, expect a retracement back up, full candle body, maybe up to the premium end, and then we can continue lower. So don't get scared if it comes back up into this range. You can be wrong. This was an example where you can be wrong and it still provides a good run for you. So I'm fine with it not doing what I'm telling you it's going to do. If I'm saying, okay, I'm allowing it for it to come up and trade up into the premium end of this, maybe into this fair value gap, I'm not going to be scared about that because that's what price should do. If it just wants to just run all the way to the target, obviously there's nothing wrong with that either. So this is what I'm talking about, right? Here's your IFVG trading back up into it. Fine with that. We still got 15 minutes till 10:30. Plenty of time. Now remember what I said earlier is you could see it form a swing high in here. We take it once and then we drop back down. I wanted to trade through that short-term order block, I guess. Get down there and then we should sweep. There's no inefficiencies really besides this 5 minute. If you zoom in here on the 5, we got this one we're kind of wicking back into, but on the 1 minute, nothing there. This inefficiency was filled completely with selling and buying, and there's not a lot of inefficiencies below that, so you could just see it. There you go. There's your partial bingo part 2, and you can see how quick it's running through, right? Obviously short-term low there. We do have this inversion fair value up on the 5 minute. I'm actually going to draw that out. Watch this gap over here. Should hold price too. So this low obviously should be taken, and then London low. I'm going to remove this ERL. So now we've placed this as a short-term swing high, intermediate term high here. You could probably count this as an intermediate term high too, since we're filling this inefficiency. If we form another swing high on this right side, look how perfect the 5 minute inversion fair value gap was held over here. Look at the candle bodies holding that. Oh, selling pressure is kicking in now, guys. Wow. Goldman Sachs. JP Morgan. Yeah, session liquidity pools are your true ERLs. So random swing lows and swing highs, you can still take partials off. Like there's nothing wrong with taking a partial there or these inefficiencies, but price action is going to target the swing lows that are time-based. And look how close now we're getting to 10:30. Selling pressure kicking in randomly there. And here's 1030, about to pierce the low. There you go. So London low bagged and tagged. The market is unpredictable. Don't try and time it. Can't do anything about it. It never gets old. So I'm fully out. I'll send a screenshot of my execution. I traded it on the micros today because the stop loss is a little bit too large for my liking. Taking partials as we went down, as you can see, basically on every level. So I took partial on this swing low, and London low. But take care this weekend. Enjoy it. Spend some rest. Get away from the charts. And I'll catch you guys all on Monday or Tuesday.